Hey everybody, it's Pete. Good morning. Welcome to a new episode of today's Best Stock Picks. It is Thursday morning, June 3rd, 2021. Thank you so much for joining me today. We might as well just get straight into it. We're going to talk about the meme stocks. They're on fire still. However, we're not going to talk about AMC, although we will review the charts. We're going to talk about the other list of stocks that are kind of dragging behind that in its draft, I guess you would call it if you're a runner. And specifically, we're going to focus on Workhorse stock, WKHS, and why we bought it last week, how it's performing now, and how you can still get involved, because we're going to give you the exact levels today. We're also going to do a deep dive into how our community is finding just amazing ideas every day outside of the AMC of the world in sector rotation. And this is a really important lesson because you really want to be on top of the market in normal market conditions. This is amazing. We're getting some incredible percentage returns. Let's soak it up for every minute while it's happening. Excuse me. But what if this story dies down? What if this meme stock madness comes to an end and we kind of get back to normal price action? You still need to have a plan. You still need to have a system where every day you can find opportunities, whether or not the market is flying or whether or not the market's going sideways, which actually brings me into the market right now. We talk about the stock market power pyramid, we've been calling it, where the bottom of the pyramid is the foundation, which is the big broad-based market. Just slightly above that is the sectors. Above the sectors are the industry groups within those sectors, and then you have the individual stock itself. So once you get into a market that's obvious, that kind of lifts everything. But what if the market's not obvious? We're going to take a look at the SPY right now, and we're going to work our way over from the market to sectors over into individual stocks. So stick around. We're going to share the screen right now. And we're actually going to start out with, well, actually, let's start out with Workhorse. Let's actually start right here. Workhorse actually pushed lower while the other stocks were exploding to the upside. But over here in March, after this implosion, we started to make notes of where the stock stopped going down, where smart money stepped in and held it. So that's really the level that we're looking at right now as the immediate initial profit target. But that really wasn't the entry. There was a lot of stocks that had a higher short float, such as Workhorse stock or AMC stock or GME stock. This one wasn't ready to go yet. So we were looking for other clues to determine when the smart money was starting to give it attention again. And that actually happened over here. In the first week of May, roughly around May 10th, was it 10th? 10th and 11th, volume started to step up again, but despite the fact that it was going down. So now it was back on our radar every day and a part of the list of stocks that we were watching. But that wasn't the entry yet. The entry was actually here. This was the level that it pushed off of, and we said, okay, if it gets above that level, smart money now is starting to pay higher prices. So we noticed it here, started paying attention to the new levels over here at 950, and this is where we broke last week. So if you go and watch a video from last week, that's where we started to build the position. Now, we had a good close yesterday, but then after hours, you can see it's actually exploding again. So the levels that we're watching are now 1450 and then 18. So if you didn't get involved in the prior move where we talked about it and called it out at 950, now it's actually up at a different level where you can take a look at it and has at least a $4 move. Now remember, and I want to talk about this because this is pretty darn important. We said 1415 to 1850. That's the initial target with the initial profit target. So the initial entry, if you miss the 950, with the initial target for profits. That doesn't mean it's our ultimate target. It means, again, I want to reiterate this and talk about it because if you want to elevate from chart reader to trader, you need to understand the difference between just looking at charts and actually building, if this happens, then this happens. If this happens, then I'm going to do this. So 1850 is the minimum profit target that we're willing to accept risk on. So you accept the risk because you think the profit target is likely to happen. Doesn't mean it's definite, it means it's likely. It's not the ultimate target. We get questions all the time in the comments, which I think are really good questions. You call that a level, is that it? No. What happens at that point is if it gets up to that initial profit target, which you took because of the initial risk, now you move up to what we call the profit maximizer, which is where you learn to trail the profit and squeeze as much out of it as you can on the way up. And that's what pays for all those little pesky losses. So that's really what we wanted to talk about today. There's a difference between just paying attention to the volume, just paying attention to the price action, and actually knowing what levels to watch. So whether or not you got involved in AMC, whether or not you got involved in BlackBerry, we also talked about BYND as one of our top stocks to buy yesterday. We'll take a look at that in a second. It doesn't matter. Don't have fear of missing out. Do something about it and be ready for the next move. So now we're calling out the AMC move. So we're going to take a look at a couple of more charts and take a look at a few more ideas today. But I think first we're going to start out again with that power pyramid. You could see that the fact that the SPY and the market really hasn't done anything for the better part of 2 months, and actually 2 months and a little bit more now, and the fact that we're finding great ideas every day is a pretty awesome experience. And the reason we're doing that is what you see on the screen right now, which is sector rotation. Hopefully you're a regular viewer of the channel every day. Please do me a favor, click down to subscribe, give us a thumbs up, hit that alert button so that you get these updates every day where we're not only giving you stock picks, but we're also telling you where the smart money is rotating into and out of. If you're a regular viewer of the channel, you'll know that healthcare was at the top of the list for about a week and a half, and then it just fell off a cliff. So we stopped watching it. Smart money started dumping it. Smart money started to stay away from it. And then we asked ourselves a question: over time, over a day, over a week, over a month, where is the smart money rotating into? And right now it's energy and basic materials. Those are the top of our list right now of stocks that we're starting to pay attention to. So which stocks should we be watching in basic materials? So right now it's MP. Again, you guys seeing similar clues here, not screaming to the upside, breaking out to new all-time highs. They are actually turning around. And this is really where you start to build good positions. DNMR, another one. You can start to see the clues here. Again, look at the bottom of the screen, volume starting to come in, working our way over to energy. And we've been talking about energy stocks for about a week now. SM, getting some follow through. CPE, getting some follow through. CLR, getting some follow through. So do you start to see now, you'd be like, okay, these are great. These all already exploded. What about something that is starting to move? Well, that's where you really need to dig in and do your homework. FANG is right on the bubble. PXD, right on the breakout bubble. VLO, right on the breakout bubble. COP, right on the breakout bubble. So if you missed some of those other trades, EOG, see how start following the smart money, you start to see where the money is already sitting. That's what we want to be paying attention to. We just mentioned before BYND as one of my favorite setups yesterday. Push up, pull back, close on the lows 2 days in a row, got a nice rally. And that one we're looking for follow through today as well. All right. So one other one that I want to mention today is IBM, which is setting up really, really cleanly at this breakout level. You can see finally it caught up with this longer term trend, which actually exploded over here on earnings. And now we're looking for IBM to follow through today. And we're really looking for it to get above the 146 level. Two other stocks, ironically, that are at exactly the same price. One of them is eBay. And let's zoom out a little bit further here so you can see what I'm looking at. And the other one is Snap. Have both of these in your radar today. They're actually at the same level that we're watching, ironically, which is right around $64. I actually want to finish up today's video with an important lesson that we had from our coaching call last night, which is what happens when, we actually kind of just talked about initial profit targets and initial risk, right? So let's say you put on the trade and it moves against you. Now everybody knows, okay, that's my stop loss down there. I'm getting out if it gets down there. What if you really love the trade? What if it's just like one candle that spikes down and looks like it's going to stop you out? We actually had a trade that we put on in CRM yesterday. Great entry, everything set up well, triggered exactly where we wanted it to be, and almost stopped us out yesterday. So it moved lower. It's just one of those things, big part of the trades, right? Some of them work out, some of them don't. Keep risk what it's supposed to be. But what do? Like you have your initial risk and it moves against you. Well, if it moves against you, but you still really have built an amazing argument for the trade, scale back. You don't have to get out of the entire thing. If you have 1,000 shares, but the trade moves against you and you don't like the way it's trading at that moment, doesn't invalidate the idea. Maybe just that timing was off a little bit. Scale out. So you have 1,000, go down to 500. You have 1,000, maybe go down to 300 shares. Get 700 off the table. Lower your risk profile until the trade's working out. And here's the big part of what the trader in our coaching call missed, which is these are the coaching calls to me are the most valuable part of our community. I said, why didn't you get back in? Because we actually were talking about Workhorse, where he put the trade on exactly where we expected it to. It rallied, kind of danced around for a couple of days, almost came down to break even, and he took off 50% of it. And I said, that's okay if you weren't comfortable with it, but you needed a plan. What if you get validation again, the stock starts to move in your favor and does exactly what you thought? put those shares back on. The same way that we have to have a plan for when a trade moves against us, we also need that same plan for it moving back. There seems to be like this gray zone where like I'm getting stopped out or that's it, or I'm hitting my target or that's it. It's like driving. You got to course correct amongst that. And then if it pulls back and keeps going, okay, that's fine. You take the rest of the loss, but now it's on less shares. But if it pulls back, you scale back, and then it starts doing exactly what you thought, put those shares back on. And that's what separates you from somebody who's struggling and can't get paid from somebody who sees their account go like this every single month, because you're on top of your game and you have plans for both sides of the trade. And that's really where you want to get to. Elevate yourself from chart reader to trader. That's our mission, to help you do that. Real people, real results. Thank you so much for joining me today. Give us a thumbs up if you find these videos helpful. Leave a comment below. I'd love to hear from you, and definitely subscribe. That would mean the world to me. Have a great day, everybody. I really appreciate it.